Hello, Trade Pros. What's up? It's Victor from Trade Pro Academy. I hope you guys are doing great. And we've got yet another video for you guys today based on the volume profile. So this video is going to show you the best dip buying day trading strategy that I've come across so far with a volume profile, right? Buy the dip right with a volume profile, because instead of using all these trend lines, this and that, we're using auction market theory and the volume profile, the premise of actual movement, to identify where we can actually see massive support and resistance areas. So throughout this video, what we're going to be showing you guys is a intraday strategy, right? You can use it on any asset you want. I'm going to be showing you mainly equities like Amazon and SPY, but you can use this dip buying strategy with the volume profile on pretty much anything, even futures. So if you guys are excited about this video, drop a like, hit that subscribe button, and ring that little bell to notify you when we drop videos like these and when we go live. So why don't we hit this intro and then we'll get right into it. We've talked a lot about volume profiles. You can see a lot of volume profile videos in and around our website, our YouTube channel, wherever it is. Now, I'm not going to talk about the bare basics. We've already done that. If you guys want to see more of that and you want to understand the bare basics, we got a link in the description. Go hit that up and watch that video. But if you guys have already seen that video, then this is the video for you. We're going to be talking about day trading dip strategies with a volume profile. But to do that, we have to understand two key concepts about the volume profile in a deeper level, right? Auction theory and talking about distributions. Distributions and volume go hand in hand in creating areas where we can actually trade, areas of attraction, magnets, holding areas, right? Supports, resistances based on actual volume. So why don't we jump right into that and take a look at exactly what I'm talking about, introducing distribution theory. What I'm going to do is actually just show you here an image on the screen. So let's just put that up. We'll talk about the SPY and get this going. So we've got the SPY right here in front of us. So we got the SPY right here in front of us. And what we have is different distribution blocks based on the visible range volume profile here that you can find on TradingView. Pretty simple. Now we're going to be using the volume profile you guys see on the right-hand side. This visible profile changes based on what you have on the screen. So if you zoom in a lot, it's only going to show you certain data. If you zoom out, it's going to show you a lot more data and a lot more on the volume profile front where these distribution blocks sit. Now on the screen here, you guys can see we've got three different color-coded boxes, right? The red one in the middle is just the one that I had from before, so don't mind that one too much. But a distribution block is what looks like a belly, right? Each one of these three blocks is a larger belly or a larger distribution based on a daily on the SPY. Now, these areas, what happens is, to surround a distribution, you actually drop off in volume from the high volume node into a low volume node. This is what creates a ledge. So these ledges sandwich the distribution or the belly into a specific area, which are playable, right? Price wants to stay where there's heavy volume, and that is going to be in the distribution block. So price generally moves from one distribution to the other, and it passes through that low volume in between distributions, right, through the ledges fairly easily. So if we look at these three areas mainly, we'll see that when we enter a distribution, right, especially this lowest one, when we enter it from the upside going down, what we're going to experience is a move into the bottom of the distribution, or an attempted move into the bottom of the distribution. So if we understand this, the bottom of that distribution wants to sustain its support because that's where volume cuts off. That's where the ledge is. There's no more volume through that, and price wants to stay where the thick volume is, meaning in that distribution. So our ledges in and around distributions are playable support and resistance areas. This is exactly what I mean by buying the dip strategy and why this is super effective, even if you look at this on a wider scale. But we're going to focus on the day trading aspect, where these key distribution blocks align, where we've seen most recent volume trade, and where we can find key dip buying opportunities at the bottom of these distribution extremes. That's going to be a key. One of my favorite distribution strategies on a day trade front is going to be letting a price drop into a new distribution to the downside. So as you guys saw earlier in the clip, we had a large distribution at the bottom where price enters under about 390 or so in the SPY, and the bottom end of that distribution is around 363, 362, 2, something like that. And that bottom end is that dip buying opportunity, because we know based on distribution theory, when you enter a distribution, the target is going to be the other side of that distribution to see if we can continue or if we reject and want to stay within that fair value area. So with that in mind, when we enter a distribution from the upside into the new distribution below, we are going to be looking for a move at the bottom of that distribution, which becomes an amazing dip buying opportunity. Now, this isn't always going to be the case on a day trade perspective, because sometimes we're not in that area and we don't want to force anything. So let's take a look at what exactly I mean. We'll throw this image up of the SPY on an intraday basis. It's going to be a 15-minute chart, and we're going to outline a main distribution block, and we're going to see how that plays out, because at a specific point in time, even you wait a few days, you're going to get the move back into the bottom of that distribution block where we can look to buy the dip on an intraday basis and maybe even look to swing it depending on how it goes throughout the day. If it reaches its other extreme of the distribution, we probably want to cut the position and take our profit. So let's take a look at this. So you'll see here on the screen, we have the SPY. We have this yellow block of distribution that is super, super evident. You can see where the belly shapes up on the volume profile. What happens is price drops back into the distribution in and around late June. We drop under the 382 area. And what are we doing? We're holding that new distribution resistance as a key area where sellers come in. Why? Because we're in that fair value area and price wants to oscillate and stay in that distribution block. However, doesn't mean that we're going to buy everything within that distribution. We are looking at the bottom of that area, which happens to be around 373. You'll notice we tested 1, 2, 3, about 5 times at the lows, and each dip buying opportunity presents us with 5 to 8 points of upside potential. So when we look at this, we really, really want to understand that we need to wait for the bottom of that distribution to be tested. Maybe you have qualifiers like volume, a few rotations, whatever the case may be. This is the dip buying opportunity that I want to see, and we're looking for that, especially in our live trading rooms, if we have something of the sort, when we have a distribution low or top, right? This is just for buying the dip, and we're looking to continuously pick that up, pick that up, pick that up until finally it's broken. Now, at the bottom of that distribution block, what we like to do is either we'll buy some calls or sell some premium in anticipation that price is going to elevate itself. We can do it on a medium term, or we can just day trade that aspect. Now, we can look at any other stock, right? Even if we look at Amazon here, we're going to put it up on the screen very soon, but we look at Amazon and any other name, every single name has distributions. Every single name can be used with a volume profile, and the same distribution theory applies. If we're trying to buy the dip on an intraday basis, what we want to see is, 1, is there a very strong distribution block to the downside, right? Is there a very strong distribution that really, really sticks out visually? Number 2, can we enter back into that distribution? Number 3, let's wait until the bottom of that distribution is tested so we can see if there's some buyers coming in. Number 4, we execute the day trade plan where we buy some calls, equity, whatever the case may be, and we're looking for back to the top end of that distribution. So let's take a look at Amazon here. Amazon, we've broken it down into 2 different distribution blocks because they're not as evident as the SPY, we would say. And you can see the first one here at the bottom. It's coming in. We're coming in through the 105 down to 102. 102 holds multiple times and up we go. The second distribution block, which is a little higher, right? The top end of it is 111. When we enter back into under 111, we're looking to buy the 107 area to see if that dip can get bought up, right? And you can see there's even a point where that distribution low actually breaks, right? This was pre-market. And what happens right as the market opens? Mass buyers come into that market from the second distribution block low. We enter back into the top distribution, run up, pull back down, hold the lows, and continue the move higher. So the premise, we're still looking for these distribution blocks. We're still looking for very thick and evident ones. We want them as full as can be with very, very defined ledges in and around them, because those ledges are going to act as key support resistance areas. Remember, a ledge is a high volume node that drops off into a low volume node that really cuts apart different distributions and really spaces them out. Because what we want to see is price attract into those areas and go from one distribution to another, to another, to another, right? Whether it's up or down. Now, to wrap this up, right, you might be thinking, okay, well, I have this distribution. Do I just blindly buy it? Well, you can have multiple different qualifiers, right? One of the main qualifiers that I like to do based on an intraday basis, I like to trade on a 5-minute, right? If there's a 5-minute green candle, some kind of bullish engulfing or some kind of wick that really tells us there could be a turnaround or some kind of rotation on a 5-minute with some actual active buying and volume coming in. When we look at our volume, we want that volume to come in. That is one of the qualifiers or two of the qualifiers that I like to look for if I'm trying to buy this dip at the bottom end of a distribution. Now you could also look at order flow as well, options order flow. Are they starting to buy it at that low? You can look at level 2. Are they actually starting to buy shares at those lows? And that is how you can kind of just take that distribution and add more to it, add the qualifiers so you can increase the chances of that area actually holding. With the distribution, we want to identify that dip buying opportunity, which is going to be at the bottom end of a massive distribution block based on a volume profile, right? Let price come into it, look for a hold, look for the qualifiers and execute the plan, whether it's equities, whether it's calls, whether it's selling premium, whatever the case may be. So if you guys really enjoyed this number one, I think, dip buying opportunity and strategy for intraday based on a volume profile, smash that like button, hit that subscribe button, and let us know down below. Do you guys use distributions? Would you like to see more about distribution theory on other assets like futures? And we'll accommodate. So thank you again for watching, and we'll see you guys next time.